If you had $250, could you invest in a startup company? Well, I'm going to show you a platform where you could. I'm Rebecca. Welcome to the Mandalorian Way. I'm just a mom looking for ways to make her money work hard for her and her business work harder. Today, I want to talk to you about a site called StartEngine.com, and it is a platform that connects investors with companies that are looking for crowdfunding in their startup ventures. Now, something happened really interesting 2015 when laws were changed, the Jobs Act in 2015, 2016, laws were changed that you didn't have to be a high roller multimillionaire to be able to invest in startups using venture capital, or they're called like angel investors. Now, companies can crowdsource funding and you too can be a part of a startup. Now, a little disclaimer, startups notoriously fail. 90% of startups fail. And I am not a financial advisor in any way, shape, or form. But even though you might lose all your money, you might get zero return, you might get a little return, you could also get astronomical returns. And what I also like about it is that you can invest in companies that you actually believe in what they're doing. So let's go to this website, StartEngine.com. And here we are, StartEngine.com. And again, it is a platform that connects investors, whether they're accredited, meaning their net worth is over $1 million, or non-accredited, with companies that are looking for funding. Another thing with StartEngine, they have a secondary market. So once you buy shares into a company, even before it has a public offering, you may be able to trade your shares with that company with other people on the site if you need to, like, get your money out, for example. So StartEngine.com, over 500,000 investors, over $350 million raised, and over 500 plus companies funded. They have companies of various types. So let's go to see all companies. There it's going to load. Find a company, become its next investor. So here's one, the future of artisanal pizza. It's actually a pizza that's made by a robot. To drones, to medical devices. You can filter by progress. Some are funded if you want to see which ones have already been funded. Industries and most funded. I want to go through an investment opportunity. I'm just going to pick the first one that popped up, Monogram Orthopedics, and we're going to look at how to look at an investment. So right now they have over $8 million raised. They have over 5,000 investors in this. They have a valuation of $89.9 million. Now, the valuation is tricky. The valuation comes from the company and it's a guess. It's a total guess for what their revenues may look like. I'm going to say I looked into how they decided they were valued. I mean, how StartEngine says, we'll value these companies. And this is a guess. So it's a guess. Okay, and here, price per share, $7.52, minimal investment, $250. $250, you could be an investor in Monogram Orthopedics, future of joint replacement. The max that they're offering is $34.9 million, and it's a Reg plus A. Now, there's two kinds of offerings on this, Reg A plus, which they're looking for up to $17 million. There's another offering that's Reg CF, which is up to $5 million. So in each of the companies that puts their offering up, they say who they are, reasons to invest, if they have a track record, there's an industry need for what they're offering, what their overview mission is to make orthopedics personal, orthopedics reimagined. I like this. They're all like this. The problem is, what's the problem? And they go through it. And then what's their solution? And they go through it. The market, what is the industry like for this product in the future? So is there a market for it, for this particular solution to this problem? Their track record and what we do. They also have an offering circular, which is all the legal stuff that if you have a lawyer, maybe your lawyer wants to read. All the financials. So it's there if you want to go through it. Risk related and filings for the SEC, the Securities Exchange Commission. what is interesting on StartEngine, if you are a brand new investor, they have a lot of education. And the first one I would go to would be Investing in Startups 101. And it's why invest in startups. I'm not going to read it all. They do a disclaimer. 90% of all startups fail. However, the 10% of startups that do succeed can provide crazy amount of return. So your home run investment is what you're looking for. So choose your investments wisely and choose them according to what resonates with you. This is the big difference. Who can invest in startup? Traditionally, you have to be an accredited investor, which means $200,000 in annual salary or $300,000 if you're married, and have $1 million in net worth, not including your home. So only 10% of U.S. households had access to these opportunities. But now, after the legislation that changed in 2015, 2016, crowdfunding is possible, and you can get in as an angel investor or a venture capitalist. So when you invest in these startups, you invest in either stock, which is an equity part of the company. So you are a shareholder. You are a tiny business owner. If you're $250, you're $250 of a business owner. Some companies raise debt, which is basically a loan, and you get a percentage back on your money as a loan. It's a little bit safer, but the upside is not as great. And then there's things called convertible notes, which is basically you loan the company money, and at a certain time, the money converts either into equity, into stock, or you get your money back for the loan and the interest on it. Most of these offerings on StartEngine are in common stock, which means equity in the company. And you're buying certain number of shares, which if they go public, you have those shares in the company. And maybe if it's a great IPO, public offering, you'll get a fantastic upside. The other side is nothing could happen and you say sayonara to your money. Just saying. Disclaimer, Kevin Leary is part of, I think he's like a celebrity endorsement. He's a strategic advisor, but from Shark Tank, Mr. Wonderful. Take it for what you think about him. And then I want to go through another one. So here's Helix Fitness. They are brand new. They only have 50,000 raised in like a day. They're a Reg CF, so they are looking for less money. Here, $1 million max. And that's what I found, that the difference between Reg CF, Reg crowdfunding, and Reg A plus is the amount that they're looking for. Minimum investment, $500. So let me click through this. I want to say invest now. And they also go through solution. Well, what's the problem? What's the solution? What's the market? What we do. So investment amount, and I'll go through this. There is, I'm going to say 500 annual income. There is a limit of amount you can invest of 10% of your income, and it's still a little SEC is protecting people. Unless you're accredited, then you can invest whatever you want. Net worth, I'm going to just say $1 million because I want it to think I'm accredited. Payment, you can pay with your credit card, you can wire money, or you can do an ACH from your bank account. Verification, because this could be a taxable event, you do need to put in your U.S. citizen or legal resident status, and then you review, sign, saying, I acknowledge during the past 12 months, my total investments in regulation crowdfunding may not exceed $107,000. They're still compliant with SEC, but you can invest something. Another thing that StartEngine does is they have a StartEngine owner's bonus. I think it's you pay a certain fee for the year, and then whatever you invest in, if they are working with a StartEngine owner's bonus, you get 10% bonus. Sometimes it's more depending on your investment. They also do early bird investments. If you're early in one of the crowdfunding sourcing offerings, you may get, in this case, you get a free scoop lateral trainer if you invest $500 plus. Sometimes you get extra stock. Now, this is what I wanted to come up. There is a fee associated with StartEngine for your investment. If you put in $500, it's $17. So I think it's definitely a percentage. I looked at something that was $250. I was going to invest $250. It was $8. So there's a little fee because they've got to make money some way. So your total $517, you would get 250 shares. However, this is an early bird bonus. You get 25% more shares, so your total amount of shares is $312. That's your amount of shares in the company, and that would be your investment and your ownership in the company. So if it sells an IPO, like a public offering, or you get some kind of profit sharing, this is your percentage in the company. Just a real quick overview. I hope this is somewhat helpful. I'll do more on looking at investments in the future and other crowdfunding, angel investment, venture capital sites in the future. Meanwhile, like, subscribe, and I will catch you on the next one.